The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting and very special edition of the Power Trading Hour. We're going to go through something that we don't normally go through. We're going to talk about options a great deal and what they can tell us and what they can't tell us about expiration. As we start the show off today, almost always we like to meet at this time.
The following takes place between 2 p.m. and 3 p.m.
Well, I'm almost scared to ask, is the new 24 any good? Or kind of think that after about 15 years it ran out of gas. They have no new ideas. I always worried about it. If I spent 15 minutes watching it, would I turn it off? Yeah. You can email me at path@tfnn.com. You can call it 877-927-6648. And, of course, you can post stuff in the den, too. But that and much more. Maybe a market-related question. Anyway, we're flat on the S&P after pushing up to basically 2,300 on the S&P cash. Volume has been falling for the last 4 or 5 days. It fell again yesterday. Let me pop this up just so I can tell you exactly, because I did do it this morning. Okay, so yeah, that's it. Okay, on the what is that? The 31st, almost 4.1 billion shares in the NYSE consolidated tape. 3.9 the next day, 3.8 the next day, 3.6 on the 3rd, Monday, of course, yesterday. All day yesterday, actually, it was Monday. 3.1 billion shares. So again, you can look at it as we went down on lighter volume or that we pushed higher earlier in the day with a lighter volume. But again, kind of tough to see that there's a lot of interest in, even in the push late in the day, there just aren't any, or just not much volume. A little buying out here in gold and maybe even some bonds that makes you think that people are starting to get a little nervous. I think that everybody's going to start selling everything. Maybe gold and bonds are the least sold in a pullback, but I have a feeling that there's going to be kind of no place to hide in a market pulling back once it truly reveals itself. We're going to go through options curves and what they can tell you again and what they can't tell you. But we'll get back to what's in progress going on here. But as I said, we're flat on the S&Ps. Volume is not all that exciting. It's certainly far less than the how do I get rid of this? What's it even doing there? Standard. Why does it want to do this? Oh, they're trying to sell me. Man, they're trying to sell me everything here, right here during the show. Okay. No, I don't want that. I don't want that. Anyway, as I said, not much volume, not much push. As we've gone through a lot of the earnings out here, we've seen that the destruction has been, I don't know, stocks really getting hammered, about 3/4. Stocks really doing well, maybe a fourth. I'm not including all the stocks that didn't move at all, because I don't know if not moving at all is much of a signal. But it's been certainly to the downside. I've had to sit on my hands on a few of these. I've got one good stock that's already starting to pay off. I've got a couple of others out here that look like they may be in a last engulfing. A lot of push for higher prices. My guess is these things will roll over and then they'll start to crack. But not a lot going on out here at the moment. But again, when we get into options delta neutral day, which is tomorrow, we're going to have a lot more clarity about what's going on in the market. As always, we like to start off the day with a little bit of history.
That it's all just a little bit of history repeating.
Yes, no place to hide. No place to run. I don't think it's going to be bad in the safety stocks, but you already see some movement in the standard commodity stocks around in retail. People buying all the standard Procter & Gamble kind of companies that people buy no matter what. But again, they just pull back less. They don't really not go down in a general pullback, but kind of hard to see. Anyway, we're flat on the day. We did have our history, so why don't we talk about that? Today in 1958, the Advanced Research Project Agency of the U.S. Department of Defense, better known as DARPA, is established. In addition to creating ARPANET, the prototype of the World Wide Web, or the Internet, DARPA also supplies funding for projects that provide companies like Sun Microsystem and Silicon Graphics with their first major contracts. Even in the world of high-tech, free enterprise sometimes gets a government assist. And this is really where some, I'd say 98% of what the government does is total waste. But there's always that little 2% out there that makes government worth it. This is one of the agencies that has rained down huge prosperity in some of the devices that they've funded to get done for the military. And then you find, of course, the civilian application for it. And there's hundreds of thousands and millions of jobs wrapped around that when normally throwing money at companies like the solar cell companies of the last 6 to 8 years were found out just to be thinly veiled ways of getting cash back to political candidates. So, those have failed massively. What hasn't failed is a real technology that everybody else can build on. This is one of the bright and shining parts of the government. And I think that more and more these guys have figured out a way to spend a little money, in fact, sometimes frighteningly little amounts, and get giant bang for the bucks. And I don't know if you can say anything more about it than that. A great part of the government, DARPA. One of the better things that's kind of snuck through, and of course, all the tech companies are having issues with it. The U.S. House of Representatives voted on Monday to require law enforcement authorities to obtain a search warrant before seeking old emails from technology companies. This is a win for privacy advocates. And of course, now it goes to the Senate, where it may have a little bit more of a problem. But we might be actually getting a little bit back of our rights that were guaranteed us by just being born here in the United States. Wouldn't that be nice? But of course, it'll be a little bit better for those people that where you're the product, actually, because they won't have to always be forking over no matter what someone asks, whether it's legal or not. Anyway, a good day yesterday.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. What I wanted to talk about here, just before we start getting into some charts and what options can tell us and what they can't, is after the bell, because this is kind of it. We got a few things coming out maybe on Thursday, but this is kind of it. We're going to be into next week before any earnings really make any difference, I think. This is kind of the last hurrah out here. After the bell tonight, Assurant, AIZ, Buffalo Wild Wings, who I've quit going to because I can get a filet for the same price of 12 wings, some celery, and blue cheese. I sure will take the nice baked potato and filet. Yeah. So I don't know if they're going to be doing any good. I think they've just priced themselves out. The Container Store Group, CTS, Gilead Sciences, GILD, and that's even at half price on Tuesdays and Thursdays. I'm becoming such a tightwad. Jack Henry Associates, JKHY, Netgear, NTGR, O'Reilly, ORLY, Panera Bread, PNRA, Take-Two Interactive Software, TTWO, TDW, Tidewater, Walt Disney Company, DIS, and the Zillow Group, ZG. I'm trying to remember the one that I was thinking of that's like tomorrow. There's a couple of them that'll be little spikes, but I don't think anything that can actually move either the NASDAQ or the S&P in the next few days by itself anyway. Even if they yelled fire, I don't think that any of those are going to change the natural direction of the market. So we'll look at that. Anyway, every month there are options expirations. And one of the things that happens in option expiration is a thing called delta neutral. After options are actually used or sold, let me put it that way. There's a thing that a lot of people call the option smile. That's kind of, if you drew out the wins and losses out there, that you'd see kind of a thing that most of the time is some kind of bell curve looking thing. That's what they call the option smile. And a lot of times it's a little different than what we're actually looking for. But there's kind of a wisdom of crowd, which is if you put a bunch of marbles in a gallon jar and you ask about 25 people how many marbles are in that jar, there'll be a few people that are way off to the upside. There'll be some moron that guesses too. But for the most part, if you average them out, they'll get pretty close. Most of the time with 24 people, you will get within 5% of the actual amount of marbles in there. Just random guessing, if you get that up to 100, it's like 2%. And many times when this test is being done, because this is kind of one of the first year statistical tests in a lot of colleges, they'll go into a bar and have people do this. It's not uncommon to be 1 or 2 marbles off by the time you get 50 people. So it's kind of a wisdom of crowds thing. Of course, option market makers tend to be the best traders that Wall Street can find because there's a ton of money to be done when it's done right. What I wanted to do is go through some of the charts that have options out here and kind of tell you by looking at the curve what you can figure out about options and the way things are looking. But one of the reasons why I think that 2240 out there, we showed the chart in the last couple of days, nothing's changed so far, but it pretty much shows that they're looking at 2240 as the expiration spot for a week from Friday. Now, that's not all that much down, and we could kind of just drip down 5 points a day, but that kind of continues now into March. But we'll look at a few of these out here, and we'll comment on what I see. This is Yahoo's expiration out here. So let's take a look at this. Now, the big thick lines, you may not even be able to see the thin lines out here. That's the March put. But the red and blue big lines out here are how much money is going to be made if the stock actually expires at that particular price. So, you know, literally the curve from up and down at 30 bucks, there's literally no money made on any call whatsoever in Yahoo. And at 44, there's literally no money made at any put. So that money is kind of goes to money heaven, actually, the option market makers. Normally, if the option market maker has his druthers, he tries to get it at the point where both of these two hit, and he keeps the maximum amount of money, which is all this money underneath. I kind of call it not the stem, but this one's kind of more like a goblet. And everything at the very foot that the goblet sits on is extra money for the option market makers. But what you can see here is that any money down is almost linear from this $39 spot. Of course, Yahoo's at about 44 bucks now. This would say that, you know, that why they could see this stock going down a bit, that would be linear. Higher is pretty much logarithmic. You can see the blue line move up a great deal in 20, 30, 40, 50, $60 million in options payouts if these things go the opposite way. But what you should think of this is kind of like a bell curve, i.e., not everything in the bell curve hits right at the top, right? There may, if you get all the way out to a bell curve, the last little bit of it, maybe 1% chance that you get anything in a normal distribution on that side. So a lot of times these curves out here show you a great deal, which is it could go down, but they don't think that there's a lot of risk out here for it to go much further down, maybe a little bit more. What they really are saying that the chances of this thing going to 40 or 50 bucks is almost nil, though. They have written calls out here that basically say that we don't think there's a chance in hell that this thing is going above maybe 44 or 46, and we're kind of already at the end of that already. So when you think of these, don't think of them as this $39 as an absolute target. Just look at that as maybe that's kind of about 50% of the time is exactly where this thing is going to exit out a week from Friday. And if you go through it and add them up over the time, they will. That's not a 100% chance, though. So there may be, say, a 10% chance of $34. But at the same time, there may only be a 2% chance of 46 or a 1% chance at 48. Normally, these things are going to fit under some kind of natural distribution when you look at them. So hey, there's more than a better chance that that the stock pulls back a little bit than goes higher. And guess what? Almost nobody of the best traders in the world for option market makers think that this thing is going that much higher. They wouldn't let the odds out there be that great to go higher. It would look more like the downside. When we come back, we'll look at more of them out here. But one of the reasons I think lower, we're going to look at these, but most of them are pointing lower. Another good reason to think about how this pullback in February finishes itself off. We'll be back after this.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And there was a good question in the den about the wisdom of crowd and political polls. And I will tell you this, or as a better question, if everybody that was pushing the outcome of the polls lost their job if they weren't right, do you think that they would have asked better questions and maybe even worked harder to find representative people to ask, and ask the questions correctly? You know, there's a whole lot of ways that you can ask questions to really drive the outcome. And unfortunately, many political polls are now nothing more than a way of making news, not reporting it. And just think if these same people that did the poor polling were option market makers, they'd all be broke and out of business. And that's kind of the difference between something that you may see in the newspaper and in options. There are people actually losing huge sums and making huge sums every month in options. And these market makers have to be as good as the bookies, which are basically the same thing. They are guys that are very good at figuring out what the true odds are for anything. And are they always right? The answer is no, but they are right a lot more than other people, or they would not have a job. So let's take a look at Xilinx here, and I'm going to show you this blue line as it just continues to go higher. But if you look at the red line, which is the puts out here, this thing is pretty flat down to about 52 bucks. So the way that they've written the options and the spreads so far, again, this may change tomorrow a little bit, but the option market maker, you know, if this thing goes down $2 or $4, he's out $2 million. But if this thing goes up $4, he's out $6 million. So what does he think is going to happen in Xilinx? He doesn't think this thing is going that much higher. He thinks it could go much lower, and maybe there's a little bit of money out here for somebody with puts, but not that much. They haven't written a great deal of them that would pay off big to the downside. That kind of points you in the direction. And again, this is not going to be a single stock pick, or am I asking you to make a position out here? Just look at almost all of these. There's going to be some that are perfect Vs, and those, we'll get into that in a minute when we get to them. But pretty much a lot of these are exactly this way. A little lower out here, there isn't a lot of money to be made in the puts. The option market makers are more than willing to think that the that win probably comes out at 97. Probably that's about as high as you would think, maybe 98 on the high side of this thing. If you go back another $10, you know, there's another 10 or 12 million dollars to be made. But if you go down $10, there's maybe 3 million or 4 million to be made. So just, you know, when these guys are looking at it, they're saying, okay, which way is the market going to move? I've got to be set up to where if it moves to the south side, I don't risk much because I think that's where it's going. And to encourage people to buy calls that will probably go and expire worthless, I've got to make it a little sweeter for them on that side, which is exactly what a bookie does in Las Vegas, or even if they're here. I just don't know any bookies because I'm not a gambler, so I don't know. Anyway, so when you look at these curves are not going to be perfect bell curves. They're going to be, a lot of them are going to be kind of U-ish. Some of them are going to be kind of a V on the side. We'll look through more of these so you can see. But most of these are pushing to lower prices. Again, some of these don't have any money to be made in them if they expire. And this is a lot of times what option market makers love, because they just keep all the money of the last 45 or 60 days these options have been out on the market. When we look at WFM, this is a good example. This thing can go up $2 and maybe down $1 before there's any real money made. And that's going to be kind of the top of your bell curve. That's where you're thinking, or at least the option market makers are saying, you know what, I'm probably figuring that 75% of the time this thing is going to be within $33 and $29 or maybe $28. So if when you see these, and I may find one out here that's real flat, gives you a good indication that they may see a lot of downside, not much upside. Sometimes they won't see anything on either side, and they write the options that way. But again, when we look at Western Digital, this thing basically is got, what is it, like $79 or something today. This thing's at the very high end of its movement. More than likely, this thing is going to head down to $75 by a week from Friday. Now, when you look at the put side of this thing, to really make the same kind of money, if everything expired at $79 today, you'd have to get down to about $62. So the reality of a lot of these stocks that have run up very high is that the option market makers know that these things can come back and be pretty whippy to the downside. When you see this much downside out here, it lets you know that the option market makers don't want a lot of risk if things head south. Now, they'll change this a little bit, like I said, tomorrow as options go delta neutral. WBA is another good example out here. It's going to be, something that can expire around $82, but all the way down to $80 and maybe as much as $83. This is maybe $84 is kind of about 50% of the time it's going to expire in that range. We'll know a lot more, like I said, tomorrow. I wanted to get to a couple of others out here that I thought were very good. We talked about stocks that are very predictive with a kind of a V pattern. And this VOD is a good example. The up and down sides are almost linear. There's a little bit of kind of a curve as you go out. The downside, there's nothing but linear. And when you want to try to say, okay, this stock is going to probably expire at $25, this one probably has a 75% chance of expiring right at $25 a week from this Friday. So we'll take a look and follow up on that one. But when they get very V-ish out here, the option market maker has a fairly good idea that this thing isn't moving anywhere. He's more than willing to sweeten the pie a little bit on options to the high and low sides, just expecting them to go nowhere and him collect all the money as they go unexpired. See what else we have out here. That one's probably not going to be too enlightening. Another V out here, very kind of interesting one, is TRIP. And it's not a complete V. It's got like about $3, let's call it $2, $3 to the upside, and maybe down to 50, let's call it 52, 53, and then this thing starts taking off. But look, this is one of the few stocks that has a lot of money to be made if this thing goes south. Now, most of the time, this tells you that the option market makers are not very much worried about these things going south. And if you can find, one of these charts that really tells you that there's a compelling version for this, a lot of times this is where you're going to make the money on the downside. Those other charts kind of show you that, your premiums are going to melt fairly quick. On a chart like this, it tells you that your premiums are probably going to hold up fairly well. And they've kind of made it very sweet out there if this is the one time in 10 that this thing goes south. We'll be back after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Now, one of the things that happened is there's not always enough options to give a good prediction. So you got to make sure that there's enough money out here, enough guesses, kind of equivalent to me saying you needed to have 24 people, guess in a gallon jar full of marbles how many. That number's pretty much right. Same thing with options, although there's not a great number out there. But it's kind of one of those things, you know it when you see it. When you're talking millions and hundreds of millions of dollars, in fact, there's a lot more. Now, we're showing Tesla right now, and Tesla basically says that this thing could come back to about 237. And again, watch for this to move a bit, probably by up or down $5 tomorrow. But there's kind of this nice curve out here. And again, just how far just think of a bell curve, how far you have to go. It could expire at 245. It could expire at 230 or maybe even 227. And that would be probably 50% of the time. But that 50% of the time is still below the 259 or whatever it hit earlier in the day. So they're thinking that Tesla can pull back a little bit. 10%, not that big a deal probably for this stock. Now, what I really want to point out, though, is what they're thinking out here in March, which is this thing could be down to 222. And that's kind of the idea where you can start seeing, especially one of these, some of these stocks that have very liquid out months, not the forward month, but the out month already in Marches and sometimes in May. You can see that these option market makers have kind of a clue or an idea that these things are already drifting that way, and the options are written accordingly. So if you can, and if they're liquid, not only do you get the front month and where it's going to expire a week from Friday, but you get the idea where the option market makers think this is going, and they think it's going to continue to move down into March, at least as of today, and that's what they're betting on. So again, this one isn't saying right at 227. You've got a nice range up here, maybe $10. Now, a lot of times as we get closer, especially the Monday or Tuesday next week, what we'll find is these curves suddenly, instead of a big bowl shape, end up showing a big V. And the last probably 4 months, Tesla has been very good when you get into Monday of showing where the stock is going to expire. And most of the time, it hasn't moved more than a couple bucks. It's been very uncharacteristically flat in the last week. And the options have pretty much predicted it. So if we're probably going to get a big move in Tesla, I'm looking for it before Monday of next week, or maybe even as late as Wednesday next week. But it hadn't had a lot of action in the last few days before expiration. Some of these do have character and characters, but remember that option market makers are basically these guys, and maybe the option market maker is responsible for 3 or 4 or 5 stocks, but maybe that's his only job. All he has to do is sit on these 4 or 5 stocks. So they can develop the personality of the trader that controls them underneath. SYMC, this thing has got a pretty good, again, we're talking about real good V's here. The thing's trading at 28 bucks. It's got a very good indication that it's going to expire somewhere around 26 bucks. Now, you got great V linear moves up and down, not that bowl shape. That's kind of like a finger pointing at that price, saying that we're much more likely to move down around that 26 range before expiration of a week from Friday. So what else do we have out here? Skyworks Solution. Again, a lot of these stocks will tell you that the option market maker is not all that familiar with the way that the stock's going to move. A lot of times you're going to see patterns like this in Skyworks Solutions when earnings are coming out. And a lot of people ask me, how do you know just how far options are pointing? What's going, are the options saying 10 points up, 10 points down? If you actually look and map out the curves in these, it'll give you a good idea. But just from eyeballing it, you're probably looking at this one. They're thinking this thing's probably not going to expire anything more than 95 on the high side and maybe 78 on the low side. Normally, you can see where the money starts moving up very stiffly, almost logarithmically, where there's a break. And that break, instead of being a nice curve like on the upside here on Skyworks Solution, you see this break down here at about 77, 78 bucks. That's where they say, it isn't going any longer than that. We'll be more than willing to have a risk out there below 78 because we don't think it's going any farther than that. More likely, it's probably something like 79. So you look at these, and of course, that big bowl shape just tells you that the bell curve is not pointing a finger. It's kind of got like 5 fingers out in 5 directions, but certainly it's to the forward part of it. It's not, we have no idea. It says maybe it's 10 bucks up or 10 bucks down, which means they don't have a good idea. And if they don't have a good idea, I probably don't have a good idea. We talked about Western Digital. Same thing with STX Seagate out here. It's pointing at about 41 bucks. And it's about 45 up here. This one's not quite a V, but my guess is that 80% of the time, this thing's pointing to an expiration of somewhere on the high side of 43 bucks, so at least a buck lower. And at the low side, maybe 39 bucks out here to the low side. And that keeps the losses pretty much contained from where they're at now. In fact, a great way, a lot of people have asked me how you look at it. A great way is to go to the $45 level mark, which is what the stock normally is trading around or was yesterday when this data came out, and go right on over. So we know that there's about $5 million at risk right now. Just go down to where there's $5 million of risk on the downside of it, and you can see that that's probably somewhere around the $39, maybe just a little bit under that $39 level is where they're thinking. So if the risk is there today, just look on the downside, and most of the time, if you go to the same amount of money, that's kind of way that they mathematically put together their risk portfolio on a particular stock. Sometimes you get something like this, which is SRCL, and it's just, kind of stuck. It's this one actually is pointing to a little bit higher, but for the all practical purposes, you could get to 83 bucks and they wouldn't lose any more money or make any more money than if it expired at 75 bucks. So there's this range where The option market makers could care less. And this is kind of a good example of these very flat bottoms. They either don't know or they're pretty good. And they're saying, hey, look at this at 75 bucks. My options go to the moon if this thing went lower for the puts. And that's kind of a good indication of exactly the risk parameters. So if you're trying to say, hey, I think I'm putting on an option, you're going to find a lot of resistance if the option market maker can, tell them to come out with a nice press release before those options expire. There's a lot of tricks that they do, but you at least can look into the option market maker's mind for these. We'll go through some more of them before the end of the day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And what we have here, we had some people asking about, okay, how do you put this together for a trade? And I'm going to give you an idea how I actually do a lot of my last minute option trades. There just haven't been any good ones for months now. Maybe there'll be some good ones next week. But what you normally want to do is you want to find a nice V pattern. And we see here one in PCAR. And you go, okay, here it is. This thing's printing at 68 bucks. Options are pointing to probably somewhere around 60 bucks. And even if this thing was at 62 bucks, it would still kind of be in this low part of where the options are pointing at. So you go, okay, that's one thing. They think that this thing's probably going lower. they're actually pretty far out at $68 on the options they have now, about 3 times what they have if this thing expired at 60. So maybe there's a little something to this. So now you do the second part, which is you look at the charts and you go, okay, on this, what is this chart been doing? And you start looking at this thing and it's gone sideways, and 3-4 days it's gone sideways, and maybe there's earnings coming out. So the next thing you want to do is check the earnings date and see if we got earnings coming out for this thing anytime soon. And then you look at it and you go, April 24th. I don't need to worry about earnings on this one. So we've made the next hurdle. But you've got a stock that kind of went up straight since about $52, $52.69. You look at this thing, it keeps moving up higher. You had kind of a big day that was actually almost a down day. And then 4 days, 5 days out here with this thing where the volume just keeps kind of falling out. And another day out here where you got about 800,000 shares today, just going sideways out here. So you start saying, okay, is this a stock that can start pulling down? And if it does, what's the risk reward? A lot of times I'll say, okay, the risk reward is good or bad, and it'll be bound, kind of based out here on maybe a big high volume low or gaps in it or a variety of things. And again, if you could put together those gaps and your targets and maybe a big high volume down day and say, okay, now I know how and why this option market maker has set up his path out here. You're at $68. Could it get back down to 68? Yeah, it's been hanging out sideways for a number of days out here. Now, if I was thinking about picking some up, that may be a nice put opportunity out here, or maybe even just shorting the equity. And again, you kind of probably want to see some kind of different kind of move out here. And, you may be looking, depending on how you trade, you might go and do something like put a 9-day moving average out here on it. And then you say, okay, it kind of stayed above it, but you know what? It's kind of not being able to hold up here today. And it might even close below the 3x3 displaced moving average today. And there's no volume in it. And I think that the market's headed a little south. And you start building the case. This is not anything like DNA where you just know 100% that that's it. But you put all the different things together, including the options, as a bigger picture of what's going on out here. And a lot of times you may not get to the $60. You may see that they sell more puts or calls, and it kind of comes together. But could you make probably a pretty good prediction that this thing could expire somewhere between 64 and 62? I think you can. We'll review this one come options expiration, but keep an eye on this one, PCAR. We'll see you tomorrow, same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.